Good morning and welcome to Indian Open right here on BloombergQuint Live. It's an exciting day of trade simply because there is a bit of a turnaround in fortunes for the near term, if you will. The US markets ended reasonably okay, didn't crack too much, and the Nasdaq, the big tech essentially, helped the US markets did do really well, and therefore those stocks were the first ones which came to the rescue. Now, Asia is a bit of a mixed bag, you would have to say. Hang Seng is okay, Nikkei is not. Australia is okay. So it's a mixed picture, and the SGX Nifty is showing some upticks as well. Now, the question is, because of that big downtick that we saw in trade yesterday, and those charts will come up on your screen, the kind of fall that we had in the Nifty Bank in particular, it's just too vicious for it to be wished away in a day's move. But yes, we might have some corrective moves in the session today. The question is, can those last? I doubt that the SGX Nifty will really give us a true picture of what will happen during the course of the day. Just that might start off well. Lots of news flows. Telecom is in focus. Reliance is in focus. Banks are in focus. I heard just about 15 minutes ago that Bank of America Merrill Lynch, the report, they've come out with a report. They've downgraded almost all banks. And I think the report is saying that HDFC Bank is the only buy, according to them, and maybe a couple of other defensives. So it's an interesting day of trade. We'll talk about all of that with our experts. Let's get in. Mayuresh Joshi, at some point of time, we'll try and get in Jeffrey Dennis as well to speak about maybe the global picture too, because it promises to be an interesting one with Morgan Stanley and Goldman Sachs saying that the world economy is bottoming out. But let's start the conversation with Mayuresh Joshi of William O'Neill India, joins us right now on the show. Mayuresh, as always, good having you. Thanks for joining in. What did you make of that crash yesterday, Mayuresh? Was it a bit of a reset move which will take the markets lower, or was it all pain taken away in one move and now individual bets would start functioning?
Morning, Neeraj. So the way I look at markets is in three phases, very broadly. I think the first phase is the capitulation phase, the phase of shock that you probably saw by the end of February, and that played out till the end of March. I think this phase that is currently on is the phase of adjustment. So you're absolutely right. I think the markets are reacting to a whole host of factors. What is getting thrown out on the global scale, both in terms of macro data points, the expectations of IMF downgrading the global GDP, individual countries' GDP as well for the better part of this year, and expecting a V-shaped recovery in FY22. The third element obviously is this adjustment phase might last for a few months. So I think the kind of volatility that you'll see in the markets in terms of news flows that come through, the anticipation in terms of what can actually go wrong in terms of annualized earnings. So I think a lot of analysts on the streets have pegged a higher single-digit degrowth from an earnings perspective. So I think this is an adjustment phase that we are frankly going through over the next few months, which will entail a lot of volatility, and it's a broad range that the markets might probably looking at in terms of trading. The third phase, Neeraj, in my opinion, will happen after a quarter or two, when the reality will actually strike. What numbers the analysts had pegged at the beginning of the financial year and what has come through in the first half. I think that reality check is something that the markets will then see before making their next move. So I think the reality check is just indicating a downward bias or further earnings cuts. The markets might react accordingly at that point of time. So clearly, I think this phase, Neeraj, as you're rightly pointing out, I think more bias towards global flows, news flows, and again, I think the earnings outlook itself that companies and managements are throwing out. So broad-based range for the markets, maybe 8,800, 8,900 on the downside, 9,600 on the top end of the range.
Okay, Mayuresh, obviously financials come to the fore in terms of conversation, isn't it? Now today, the Bank of America note seems to suggest that their universe of buying into financials has gotten even narrower. And I think a lot of people are saying that they may not be the leaders of the next bull run whenever it happens. In fact, they might be laggards. If you are betting on financials, if at all, are you being very choosy? And if so, is it still a wide bucket of 4 or 5 names, or is it only 1 or 2 names?
No, Neeraj, I think it has definitely narrowed down. And again, the higher multiples that the street was assigning to these financials, I think the high-flying financials, the private sectors, banks, for example, or the highly rated NBFCs. I think with growth coming off and the expectations of asset quality pressures coming off and the uncertainty in terms of revival, I think everybody's pegging in a second half revival to come through very, very sharply. And history has suggested, I think, if you look at the previous crisis periods as well, what you've probably seen is that financials, whether they are the top-ranked private banks or the top-notched NBFCs, they take a beating when these stocks probably start plummeting or the markets start plummeting. They take their own time to probably find a base for themselves over a quarter or two. But as I said, I think as the reality phase will strike over the next couple of quarters, and as we adjust to the real earnings in terms of the forward forecast that we had made at the beginning of the year, you're probably going to see some element of buying emerge at that point of time, some element of value emerge at that point of time, but very difficult to preempt at this point of time, and therefore the kind of reaction that you're seeing on these highly beta correlated stocks. Coming to your point, I think the past crisis periods have always shown that these stocks always bounce back with the ferocious velocity when the markets start coming back. So I think a few names should get shortlisted, but you should still take your time, is what I've always maintained. At William O'Neill, we've always maintained the leadership versus the Lagarde argument. I think clearly, till this pandemic is over, till the entire argument in terms of whether a vaccine will be found or not, I think healthcare to a certain extent will still remain on the focus. Yes, it's a biased sector at this point of time, highly consensus sector in terms of buying opportunities. But healthcare and selectively specialty chemicals, which you so perennially discuss, I think these sectors can do very, very well over the next few quarters from an earnings perspective.
Yeah, I think some of these specialty chemical companies have come off a little bit and then found resilience at lower levels as well. I mean, alkylamines dipped all the way to 1650 or thereabouts, bounced back. Deepak Nitrite came off, bounced back. Similarly for Vinati Organics, bounced back. So it's an interesting mix of stocks. Just one follow-up question, Mayuresh, before we get to the stocks in news today, and that's on aviation. Now, did Warren Buffett manage to convince you that if you have Interglobe of SpiceJet in your portfolio, you should get out of them? What do you think is the near-term in store?
So yeah, I think he makes a very strong case, right? But again, I think let's understand, Neeraj, that the complexities that aviation companies are working out of. Clearly, I think there is going to be very, very tepid top-line growth, even if these companies start on the 17th or the 20th of May on selective domestic routes or even international routes at some given point of time. So I think it's a given that Q1 is going to be a significant hit in terms of the earnings profile. Now, the demand recovery, as we've all been talking about, I think how is that demand recovery expected to come through? What kind of rules are going to be made? Is aviation going to change forever, or the way that we fly? I've been hearing a lot of global CEOs that they are going to probably cut down on global travel, so on and so forth, both in terms of their meetings offshore and on-site as well. People are going to be skeptical, Neeraj, at least for the first half, in terms of flying, in terms of vacationing, and so on and so forth. Add to that, I think the element of costs still remain extremely elevated. So the operating leases that they've got, the rupee depreciation that we've seen, I think those liabilities are going to hit their balance sheets irrespective whether they earn revenues or not. And the competition intensity is also going to keep yields at lower levels and not let it expand. So I think all these factors, along with all the other charges that we are seeing, even in lockdown, I think the parking charges have still to be paid to the airport authorities. So I think they are going to take a hit from an earnings perspective, and demand is going to be very, very slow and tepid. The only thing that works in their favor is ATF has come off significantly, but I think that is not the only factor that will probably drive earnings and the growth that we probably want to see. So yeah, I think buying into the argument that Warren Buffett is probably making at this point of time.
Okay, well, so that's the larger section, larger range of thoughts, the 2 or 3 key components: healthcare, banks, aviation. Remember, viewers, at about 9:30, 9:35, we are doing a very special discussion on telecom as well. So you have to probably tune in back again for that. But for now, let me get in my colleague Nikki Mirchandani, who joins in right now, to tell us about the key newsmakers and the stocks that are in focus today. Nikki, good morning.
Morning, Neeraj. I'm going to start off with Marico because the results have been fairly decent out there. There's been improvement in the margins overall on account of 18% decline in ad spend. In terms of volume growth, Indian volume business has declined by as much as 3%. This comes on the base of nearly 8% volume growth in the base quarter. Also, we're looking at some other, guidance coming in from the company where The company has said that the medium-term aspiration remains to be the 8 to 10% kind of volume growth. They're going to be maintaining the 13 to 15% revenue growth. Also said that for FY21, they would be maintaining the same kind of operating margins as they did for FY20, but going forward, they'd be comfortable around that 19% range over medium term. So a fairly decent set of numbers and the guidance. Also, Piramal Enterprises, where KKR said that it's going to be picking up 20% stake for the pharmaceutical division for as much as 3,500 crore. This is going to be this is a business standard report, and we're expecting some sort of positive reaction on account of this development. It will help a company cut down its debt position and also, to an extent, prepare for this cash chest. We're looking at liquor stocks. They're expected to be in focus. They rather continue to remain in focus. Delhi is expected to charge more 70% tax on liquor. Relaxations to an extent are positive, but then the sale to an extent, I believe, could be impacted due to higher prices. Lupin, where the US arm has announced the positive top-line results from its pivotal phase 3 clinical trial of Asolosec. Now, this is a drug which is used to cure trichomoniasis, which is STD essentially. The company plans to submit a supplemental NDA for this drug, which is expected to, to be there by the second half of this calendar year. So some sort of positive reaction on this pharma counter. There'll be a bunch of names, Neeraj, which are going to be resuming operation. Be it in the likes of CIAT, you have Graphite India, you have something like Praj Industries, Jyoti Lab, and Automotive Axles. They're going to be partially resuming their operations. So do keep an eye out in these counters as well.
Thanks, Nikki, for that exhaustive list. Let me choose the one or two that matter the most. Mayuresh, the liquor companies went up on a storm in trade yesterday, but state after state, Rajasthan has high taxes, Delhi has high taxes, Andhra Pradesh has already done that. In fact, I think Rajasthan, if I'm not wrong, also gave out a decision to close the stores in Jaipur because social distancing norms were flouted. And frankly, in Mumbai, a couple of pockets in the videos that I saw, there's no social distancing, so maybe that could too come under pressure. Any thoughts here on the liquor companies, Mayuresh?
Yeah, Neeraj, I think it was scary to look at those videos. But yeah, I think what you've probably seen in terms of expectations of operations resuming for liquor companies, specifically at the retail end, and the expectations of volume growth expected to pick up quite significantly. I think the crowd itself tell you the story. But I think what has happened in terms of flouting of social distancing norms, and if retail stores are taken action upon, we're probably expected to see some amount of harsh actions actually emanating, and that probably creating a dent in terms of volume growth as well. So I think it's more momentum at this point of time, because what you're probably seeing, and you rightly put it, I think the hikes will ensure that the hikes in terms of whether the hardcore liquor sales or whether it's beer, for example, I think they start going up significantly. It will not create a dent initially because a lot of people will queue up and buy. But I think going forward, I think how these volume growths will grow or will they normalize at some point of time is interesting. The second element obviously is also the input costs have gone up significantly. So I think ENA and glass prices have moved significantly higher. But yes, certain companies are inching towards the premiumization angle, which is playing very, very well for them in terms of both volume and value growth. So yeah, I think it's more momentum trade at this point of time for liquor companies, Neeraj. A structural fundamental story, I think, still will take a couple of quarters.
Okay, Mayuresh, stay on. It's 8:45. We should try and get in some thoughts around the charts as well and the derivative positions. So two experts join in, Amit Harchekar and Rajat Bose, both of them. Thank you so much, gentlemen, for joining in. Rajat, you were bearish the last time that we spoke. It started to play out. Today might be a different day. There might be a day of a pullback. Would you use this uptick that we are likely to see today to maybe create fresh positions, futures or options, which give you a chance to capture the downside?
First of all, I would like to make some observations, Neeraj. That is, the high that was made last Thursday, the Nifty started its journey that day from its 50-day exponential moving average and went on to test the 50% retracement of the total fall. And that was achieved that day, and after that there is a gap down open now. Now the point is that, first of all, I would point out a particular zone unless that is taken out by the Nifty decisively, you won't see much of a pullback. That is 9600 to about 9730. This is a zone where hardly any trades have happened, either on the upside or on the downside. So this zone is very crucial. Unless it is taken out on the upside, which I don't think it will, and this will actually come down. For me, the 50% retracement is the cap, and now we are headed down. Of course, we are going to see a pullback in the beginning, but I would say that pullback should be used to liquidate earlier stuck long positions. And also, you can, as you asked, that whether I would create fresh short positions. Yes, definitely fresh short positions. At least they are in order. A minimum projection as of now that I can make is 8,900 to about 8,750 on the downside. That may not pan out immediately, but may take some time. But we are headed down. All rallies should be used to liquidate earlier held long positions and to create fresh positions. Now, if you to talk about the bank Nifty, that's even weaker, and chances are that you would see that unless the bank Nifty trades above 20,120 decisively, then it will once again head down, and there is a possibility that the bank Nifty is actually headed for 19,250 kind of level. So the pullback rally is true in bank Nifty as well as in the Nifty. Except for Pharma index, none of the indices are showing any kind of strength. There is no point playing on the long side now and expecting that the bullish trend is likely to resume once again.
Okay. Amit Harchekar got it right both times really on the short calls at around 12,000 and then the subsequent longs. My question, Amit Harchekar, is this. You got it right in the move up to 9,800. That has reversed yesterday. Did you, I don't want to get into whether you reversed it then or no, but now at around 9,300 or thereabouts where we may be, and there's a bit of a pullback today, what is it that your stance would be?
Well, we are still buying the fear in this market. In fact, after yesterday's decline, we see this market has retraced close to 23.6% of this entire up move, what we saw from 7,500 onwards. In fact, we see this market is gathering more and more strength in past few days. Basically, even I was suggesting that financially is the only sector where we are seeing a matter of concern. The rest of the sectors are already showing signs of a rebound. Again, at these levels, we are suggesting further addition of long positions. The stop loss we are suggesting is at 9,100, and on very short-term basis, we expect Nifty to cross 10,000.
Okay, so conflicting views on the benchmark indices, maybe the banks, there is a bit of a consensus view out here from both our experts and could happen. So the point being, in light of these views, what are the ideas that both our experts are suggesting for the day today? Amit, I'd like to start off with you. In light of that constructive move on the index at least, are your stocks the non-banking ones and are you long there?
Well, first of all, we still continue to have a very positive stance on oil and gas index, where we still see upside of more than 25% in next 2 weeks. Out of that, because Reliance carries more than 20% weightage in that oil and gas index, the minimum target for Reliance we see is around 1,700 to 1,750. So Reliance is our buy call with the stop loss of 1,330. We see an immediate target of 1,700. Our second pick would be buying Hindustan Lever Future. Here the rationale is after yesterday's decline, we see a very good long accumulation taking place in FMCG stocks like ITC, HUL, and HUL becomes even a heavyweight from the Nifty Consumption Index. So we see the Nifty Consumption Index going up by around 15% in next 2 to 3 weeks time frame. So that's why we are suggesting buying HUL after this correction. The stop loss we are recommending would be 2,000 on a future front, and the minimum target we are saying it would be 2,300.
Well, a brave call, but could well happen. HUL did exhibit some resilience yesterday despite the shabby numbers. Let's wait and watch if there's a bit of a bounce. In fact, we will talk about some of the other FMCG names too. But Rajat, in light of your view that you are largely bearish and more so on the financials, what are your stock bets tilted towards? What are maybe one or two ideas, maybe just one idea from your end today?
I would say that buy BHEL, because there was huge volume yesterday and it has moved up. That is the only PSU, or for that matter, only old economy company that showed enormous resilience. So I would put a stop loss below 22.45, and my targets would be 24.85 and 25.75. BHEL is actually forming a base, and at 22 rupees, a lot of investors have also asked me the question that whether BHEL is a good long-term bet, because lots of fund managers are talking about the power sector, and this supplies machinery to the power industry. So whether BHEL is a good buy, good accumulation candidate, I think so, but then being a PSU, you never know. But at least for a trading purpose, definitely BHEL is a buy. Well, coming to the short calls, I would say Bajaj Finance, it has again broken some crucial support area, and that crucial support area was 2160. That's why I have put a stop loss above 2160, and my targets would be 1952 to about 1917. Bajaj Finance, even if it were to move up, even if it crosses 2160, even then at higher levels it should be sold, because it has shown certain characteristics that it is unable to sustain any kind of rally with any kind of sustained buying. So Bajaj Finance, even if it were to move up, it should be considered a sale. And apart from that, an FMCG company I would like to give a sale call on, that is Havells. I would put a stop loss above 535. Although for the most part of the day yesterday, after the big fall that happened, Havells was range bound. But today, again, after the initial hours, maybe it is likely to come down again. And its target would be 513 to about 505, with a stop loss above 535. And the other stock that I would venture out for in the pharma space, which is a clear buy, I am actually betting on that it will actually retest its yesterday's low of 681. So that's a buy call from my side in Aurobindo Pharma, and I would put a stop loss below 645. Only 8 rupees on the downside and about 25 odd rupees on the upside, kind of a trade.
Okay, now BHEL is an interesting one, simply because of the move that they did. They issued a press release yesterday inviting global OEMs to leverage its facilities and capabilities to make in India. Now, Morgan Stanley has come out with a note, a tactical sell. I think they are saying that while this could help diversify the business prospects in the medium term, the core power business continues to face multiple headwinds, and therefore they believe that there is a higher probability, 80% probability of the stock actually correcting over the course of the next 60 days. So be mindful of that. Credit Suisse, though, maintains the neutral and a target of 25. So interesting one. Mahesh, you want to comment on this one? A lot of people will get influenced on BHEL, maybe for the right reasons. I'm just trying to figure out. Rajat Bose is bullish on the charts, on the positivity. He's spoken to fund managers as well. What is your thought? Are you tactically positive here, or would you believe that it's a stock that you wouldn't want to venture out?
No, sir, there are pluses and minuses, right? So I think the minuses are still outweighing the fundamental performance. So if you probably look at our methodology, what CanSlim is still suggesting, I think the EPS rating remains extremely poor, because you're absolutely right. I think the core power business itself looks very, very shaky at this point of time. You look at the non-moving orders, I think those are quite significant at this point of time. The execution of BHEL has remained extremely poor over the last few quarters, and that has got reflected in poor earnings and the poor EPS rating that I was mentioning. I think the pluses that are now emerging, and you're right, I think what they have invited multinationals to probably set a base is the land monetization that they are not looking at. Yes, I think that can probably be offsetting in terms of what can go right for BHEL over the next few quarters. But I think it's a long period. I think these projects are long gestation projects from a capex perspective as well. So I think there might be some sentimental momentum moves that the stock can exhibit. But as I said, I think fundamentally on our CanSlim parameters, whether it's EPS rating, whether it's the ROEs, the ROCs that it generates, it still remains extremely poor. So yeah, trading bet possible, not fundamental bet.
Okay, so that's the view on BHEL. Do watch out for this one. Maybe it's a trading bet and maybe not too much. Now, the other thing is there is a brokerage note on Godrej Properties. CLSA has maintained a buy on Godrej Properties with a target of 870. They believe it's the best place to capitalize on industry consolidation. Now, Mayuresh, coming on this one, I mean, yes, there could be near-term weakness in real estate, but it was the sector of the year for 2019, bouncing back after multiple years of downgrades. And why shouldn't one look at the largest players? So a Godrej and Oberoi, why shouldn't one look at them in these times of weakness?
No, so you're right in the sense that how they are stacked up compared to its peers. I think they look better off from most parameters that you probably look at from the space itself. So yeah, consolidation would be a given going forward. I think there are again conflicting views and reports that I've probably been reading through in terms of ownership of new properties coming through, or whether I think it's going to be more of a rented kind of a scenario for new millennials going forward. So I think let's put that argument to rest at this point of time, focus on the core fundamentals. Yes, it's taken a beating as well. For the asset-light model that Godrej Properties works out of, Oberoi that you probably mentioned, I think what it operates out of, specifically out of Mumbai, the land bank that it already operates and owns, I think they are probably in a much stronger position from a balance sheet and a leverage perspective as well. I think it's the demand perspective that one needs to look at, and as sales velocity will come through with new launches over the next few quarters, these two players are definitely better placed. At this point of time, along with the sector itself, I think these stocks have taken a huge beating. So I think the performance, both from an earnings perspective, because of the slowdown that we've witnessed for the industry as a whole, and expectations of sales velocity picking up over the next few quarters as demand comes back, I think those are the two factors where the earnings ratings will hinge upon for these counters. So yeah, I think definitely keep them on my radar. Godrej Properties being low debt equity, having an asset-light model, and again, I think strong management and corporate governance of the group as well.
Okay. The other one, of course, we discussed fundamentally aviation. The stocks were down yesterday. Amit Harchekar, what about Interglobe Aviation? Cracked yesterday. Do the charts look weak, or can it bounce back?
Well, I don't think so. There is any strength left in airline stocks. In fact, we were tracking SpiceJet quite closely, and the moment the stock started trading below 50, we think overall the stock would be heading towards the zone of 25 to 28. So all aviation stocks, we see a further downside of 30%. So though we are expecting a very good rally in Nifty, but we don't expect any rebound in aviation stocks.
So would an Interglobe Aviation be a sell, Amit Harchekar?
Yeah, absolutely. On rallies, it becomes a good sell.
On rallies. Rajat, just wondering, because it's such an active pocket and Warren Buffett has just brought it at the center of the world. What are your thoughts? Quick ones, Rajat. Interglobe or SpiceJet?
I would say that I have always been bearish on airline stocks because I have never understood that what is their profitability equation. The business model never impressed me. I was really surprised when Mr. Buffett plunged into 4 airline companies because I trust his judgment. And I would say that Interglobe Aviation or SpiceJet, both are a sell. I agree with Amit. And the recent low of 865 for Interglobe, that would be taken out going forward. So there is no point being in airline stocks at all. It's a sell.
So Rajat, combining a bit of the fundamental piece as well, and even on the charts, both our gentlemen believe that aviation is a sell. Now, even if you don't want to sell, don't go out and buy them because you think that they are lower. There might be a lot between what your thought process is and what could actually happen. So just be mindful of that. Now, a few seconds left. I just want to quickly talk about, actually maybe we'll talk about it post-market open. We haven't quite discussed the sector of the day yesterday, or 2 spaces of the day yesterday. One of them was Telecom, the other one was Pharma. We've got some Pharma ideas from both our experts, but it'll be lovely to hear about Telecom as well and what you do with both Bharti as well as Reliance Industries. We'll ask Mayuresh as well, and viewers, remember, as I said, 9:35 p.m. today, 9:35 a.m. today, excuse me, I do a fairly exhaustive conversation about Jio versus Bharti Airtel, so would urge all of you to tune in on that as well. SBI Cap Securities Johnson to speak about that. But minutes away from market open, the Asian screen is mixed bag. The SGX Nifty points towards a bit of a green on the screen. So we'll start off well. The question is, can we do better during the course of the day? I think we'll try and figure that out. But here come the first rates of the pre-open session. It'll be interesting to see what the banks do in particular. And of course, I mean, the larger indices might do well. Can the Nifty bank spoil the party and be a party pooper? I think that's the question that we'll get to know during the course of the day. But the first rates on your screen, a bit of green. The Nifty 50 about 1.69, the Nifty Sensex about 1.5. So, well, that's the order of the first minute. So what is doing well? 10% uptick for GAIL, don't quite know. Let's wait and watch. Oil and gas could be in focus. Let's wait and watch. Cipla, 4%. Well, yesterday's top gainer, starting off well. ONGC, 4.5%. Well, surprise, surprise. Oil and gas is right out there. Amit Harchekar believes that that's the sector to bet on. Some of the banks like Axis, HDFC Bank showing some signs. Let's see if that continues. Remember, Merrill Lynch has come out with a note saying HDFC Bank is the only buy according to them. What is not doing well? ITC, Asian Paints, Bharti Airtel. So those are a few names that you have to keep on mind. Britannia is looking slightly weak. Nestle is looking slightly weak, but nothing, no alarm bells as yet. Banks are doing okay for now. Let's wait and watch if those rates last. Just 2 or 3 names that I do want to mark, and I would want to add a Marico to that list of stocks today. So Marico, well, nothing too great, starting off okay. Just about flattish. Interglobe Aviation looks like starting off weak, so let's wait and watch. And amongst others, BHEL, a 10% uptick. Well, let's wait and watch. 2585 for a BHEL. Let's wait and watch if this uptick continues. The pre-open rates are showing this. Rajat was talking about a target of 25. He was bullish, so that matters, but the target may not quite be there for anybody to take. Let's wait and watch what happens there. And Varun Beverages ahead of the numbers, likely to start off higher. Reliance, 1465, 2% higher. Let's wait and watch what happens there. Let's quickly focus the conversation back to our experts. So the start, and looks like the Nifty could be about 1.5% higher. Like I was saying, Telecom remains in focus. Reliance and Bharti both remain in focus. Now, both a chart check and a fundamental check. A chart check first. Amit, Reliance Industries, would you be a buyer?
Absolutely. We see this stock even testing levels of 1900 in coming months. So any decline in Reliance becomes a very good buying opportunity even for long-term traders. On a short-term basis, you will see good amount of strength even after above 1450. So that's why we have recommended a stop loss of 1330 for the long positions even on the derivative front. Bharti, again, we see a good up move from even these levels. Major breakout for Bharti has happened above 505, and we see the immediate target close to 585 to 600. So keeping a stop loss of 505, one should trade even on the long side for Bharti.
Okay. So Amit is saying buy Reliance on decline. So you wouldn't buy it if it opens at about 1450 today, Amit?
No, I will buy even at the opening levels. As I said, 1330 would be the stop loss for futures.
Okay, sure. So opening levels or declines, both. So maybe you could space it out. Now, Rajat, you would have probably heard from your fund manager friends. I've heard from mine about Bharti Airtel. Any thoughts here? Or even a Reliance for that matter?
Well, first I would like to take on Reliance. What I would say is that either I'm talking purely from a technical point of view, that is, if it were to cross 1500, the 1494 has been the high recently, and it sustains above that, definitely then I will buy, because still I would have say something like 120 points on the upside before the all-time highs are retested. That is one trade that I would be looking at. Otherwise, this is the actual trade that I'm looking at. There is a fall towards 1350 kind of levels, where I would put a stop loss below 1300 and would expect all the way up to 1500. So that's the likely possibility that I'm looking at. So Reliance is a buy, but conditional buy, either above 1500 or around 1350. And regarding your Bharti Airtel, well, that stock I'm expecting 565 to about 570 kind of levels. And that's a possibility. You would put a stop loss at 520 and look for targets of 550 first, and then 565, 570. That's the kind of possibility that I look at it. But if you ask me, it's an unsolicited view. Still, I'm saying that I wouldn't be buying either of the two companies for the simple reason that I would be away from leverage. And these two companies, especially the telecom model, is fraught with huge leverage. I don't like them as investors.
Okay, fair point. So a bit of a techno funda view out there. Technicals look okay, but he's staying away from those names. Now, the other interesting move that we could see in today's session is, well, I'm surprised. Varun Beverages is looking like starting off really low. I don't know if there'll be a 14-15% gash, but certainly looks like it. Okay, maybe these rates would settle down a bit. Mayuresh, big crack yesterday. We see awaiting numbers today, but it's apparently showing some sharp downticks in the pre-open session as well. What are your thoughts on Varun Beverages?
I think you shouldn't be playing on numbers, right, Neeraj? And I think the 9-month performance for Varun Beverages has been stellar. So if you look at the India growth, if you look at the growth in the overseas market that it caters to, I think the volume growth has been quite substantial. Again, I think if you look at the pie itself, I think water, juices, and I think the soft drinks portfolio itself, I think all these three portfolios have shown a decent amount of performance. The third element in terms of the capital raise that done a couple of quarters back to repay debt, the net debt to equity also probably remains at far more sanguine levels at this point of time. The fourth element obviously is how they're ramping up the Tropicana juices portfolio and their plant at Pathankot specifically, because the fixed cost absorption and how they're capitalizing depreciation thereof did take a toll, but I think the EBITDA margin still managed to hold on in a 9-month performance. But I think what kind of numbers come out for this quarter and what is the management commentary going forward from a value and a volume growth perspective will be very, very interesting. So I'll watch out for numbers, specifically looking at the start that the stock is giving at this point.
Okay, do watch out. Now, Mayuresh, just a follow-up question. Fundamentally, would you be a buyer in either Bharti Airtel or Reliance Industries?
So it's very interesting, Neeraj, on how these two players are stacked up. Now with Silver Lake coming through on Jio platforms and the enterprise value in excess of 5 lakh crores, I think that's a huge positive. What you've already seen in terms of a couple of deals going through, the rights issue where they're going to raise almost 57 odd thousand crores. And the expectations in terms of their fiber assets, if the InvIT sale probably goes through, the deal that they're working on with Brookfield for 25,000 odd crores, and any more investor coming into their fiber business, you're actually looking at debt deleveraging happening in a very fast manner over the next couple of quarters. Add to that, I think anything happening positively on this Saudi Aramco deal, which they're probably saying, and the expected EBITDA that they'll post on a consolidated basis, anywhere between 75-80 odd thousand as a base case scenario, I think you're probably looking at a far healthier balance sheet going forward. For Jio specifically, I think if I was stacking up all the three players, Vodafone, Bharti, and Jio at this point of time, look at the subscriber base that Vodafone has got at 332 odd million odd, and the kind of liabilities that they need to pay off, the capex, the AGR dues, the spectrum liabilities, and the EBITDA that they're probably doing at this point of time. So I think the ARPU increase is a given if they want to survive in the business in the first place. Now, assuming that they are reporting ARPUs of 125, 130 odd rupees, and that ARPU goes up to 175, it creates a level playing field for Bharti and Jio as well. So as ARPUs keep on going up, and in the case of Bharti and Jio as well, if you assume these ARPUs at 175, 180 for the better part as an exit rate for FY21, and the subscriber base of around 300 million for Bharti, almost 475 odd million or 450 odd million for Reliance Jio at the end of FY22, you're looking at a substantial increase in terms of EBITDA, both for Bharti and Jio. Secondly, I think in terms of the platforms itself, the enterprise business for both Bharti and Jio has been doing exceedingly good because they have not entered into price cuts at that periodicity and that line of business itself. And the third, again, I think is the leverage component. For Bharti, for example, I think, yes, the leverage is still higher, but with cash flows improving, with ARPU increases, and African business is expected to hold on, even if I think the crude prices have come off for countries like Nigeria, Congo, which depend on oil. I think they would still grow at a reasonable clip, which means that the cash flows will entail debt EBITDA coming off, and capex has come off significantly, and no bidding for 5G. Sum of parts valuation, Bharti Infratel might actually come off because of tendencies coming off with Vodafone Idea, but I think that is probably gestated, as is the fact that is gestated that low-paying subscribers have got freebies of 80 million odd subscribers for this quarter, but that gets offsetted with higher data consumption for the content packs that they enter into. So I think I remain positive on both these leaders in the telecom space.
Okay, we're minutes away from market open and we'll get you all that you need to know in just moments from now. Be mindful of that. Fundamentally, a lot of people are pretty sanguine about the prospects of the telcos. Rajat Bose staying away due to leverage. That's a separate piece altogether, but the charts look attractive as well. By the way, what else is looking okay? Like I said, BHEL starting off okay. Hindalco ONGC showing a bit of a bounce. There is some bounce in Axis Bank, interestingly, today. Bajaj Finance too is looking strong. So the banks are not correcting. In fact, 2% higher for the bank Nifty. It'll be interesting to see how the day progresses. But since we are minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First in, Marico reports a 7% decline in revenue for the fourth quarter, but manages to hold on to margins. Watch out for earnings from Adani Ports, SBI Life, and IT Technologies, as well as Persistent Systems today. Lupin's US arm sees positive top-line results from its pivotal Phase 3 clinical trial to assess efficacy and safety of single-dose Solosec, which is used to cure trichomoniasis. ICICI Bank will consider raising capital on the 9th of May. Some more companies like Colgate-Palmolive, Apollo Tyres, Seat, and Automotive Axles have resumed operations either partially or completely. Lastly, CLSA maintains a buy on Godrej Properties with a target of 870, says best place to capitalize on industry consolidation. A strong balance sheet provides a war chest for aggressive expansion. Well, watch out, we discuss Godrej Properties, of course, fundamentally. It'll be interesting to see what it does from a trade perspective in the next few days as well. What else? I'm looking at the broader end of the spectrum. Apollo Tyres looks like starting off okay. So do watch out for that one. Some of the MBF, some of the auto components might start off okay. Endurance Technologies too is looking fine for itself. Mayuresh Joshi, can I ask you for one recommendation? It could well be from a space that you very closely track, which is specialty chemicals or something else. But one stock that you believe people can, in a staggered fashion, allocate money.
So yeah, I think pharmaceuticals and specialty chemicals is still somewhere where the earnings bias continues on a positive scale as well as canceling. So I think supply is something that I'll still remain extremely positive about. Yes, they've got approvals which has got gestated and factored in by the markets. There is an earnings upgrades of 5 to 6%. But I think there is a couple of key specialty drugs that are still in the pipeline that can actually still work magic out for Cipla from an earnings perspective. So I think the Adware portfolio itself, any positive development on that front over the next couple of quarters is going to be extremely positive for the stock. The second element is their institutional portfolio as well. Tramadol, for example, I think if that gets released in a very sustained fashion in global developed markets, I think that will have a significant say in terms of creating that exclusivity pipeline and pipeline that they're probably working out of. And the third is any positive reaction in terms of their Goa plant over the next few quarters. So I think any positive move on that one will have fresh cases being filed for ANDAs and specialty ones as well, which will ensure that the margin profile remains protected. Yes, the valuations have moved a tad bit higher, but I think this stock probably within the entire Nifty basket and the pharma basket looks best placed from an earnings perspective over the next few quarters.
Okay, Mayuresh, we'll take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. Well, just before we get in our top calls from our experts, Amit Dharchekar, just want to give me a quick view on HDFC Life. 30 seconds.
Well, I don't see this uptrend sustaining. Maximum up move we can expect it would be around 525. That would be the area one should even exit the long positions.
Okay, thanks for making it succinct, Amit. We are a minute away from market open, and which is why this bit of a rush. But HDFC Life viewers, Amit Dharchekar believes that the up move may not get sustained. Insurance could be an interesting pocket. The results will be very, very interesting in the commentary, more so over the course of the next few days. But less than a minute or about a minute for the market to kickstart trade. Let's get in the top call from our experts. Amit, I'll start with you first. Your top call for the day today.
My pick would be buying BPCL with a stop loss of 333. We are expecting the stock to test levels of 390 because overall, as I said, oil and gas is sector we are looking to see up move of more than 20%.
Okay, so oil and gas bullish, BPCL top call for the day today. Positional, I reckon, in nature. Rajat Bose, your top call for the day today.
Aurobindo Pharma, 645 would be my stop loss and 680 is the target. Prior to that, 673 is another stop.
Viewers, remember Rajat already explained why he believes the downside is lower in Aurobindo and the upside potential is higher, and therefore Aurobindo Pharma is his top call for the day today. Gentlemen, if you can just stay on for a moment, would love to get in your opening thoughts before we thank you, because the banks too are starting off well. Let's wait and watch what happens, but here's how the first rates look like on the indices. About 1.5% higher for the Sensex than the Nifty. The pre-open rates is already suggested. Would the bank Nifty continue to do well? That's the other key question. Well, we're starting off well. Not bad at all, really. Z, UPL, Tata Motors are amongst the 2 or 3 names that are starting off well. There is Axis Bank, which is up about 3%. Vedanta and ONGC up about a couple of percentage points or 3% apiece. JSW Steel has a 2% gain as well. What is not doing well? Only one. Bharti Infratel is the only one which isn't quite doing well for itself. Almost everything else is actually done okay. What about Bharti Airtel? 536. Up about 4 rupees in trade. Britannia has some gains, 3119, about 1% higher. BPCL, top call from Amit Harchekar, 1.3% higher in trade. So Reliance and Bharti Airtel start off on a good footing. A couple of stocks that I want to mark from my own watch list. BHEL are 3% higher, not too much, just about 3% higher. There is some gains for Marico, 4% higher after the results, so very strong move there. Radico Khaitan continues to move up, and Varun Beverages has a 5% uptick, so not a bad start for that one either in trade. What about the broader end of the spectrum? The BSE 500 or the Nifty 500? Watch out for the auto ancillary names, the likes of Endurance Technologies, the likes of Motherson Sumi, the likes of Bharat Forge. Those are a few names that all of us should be monitoring. Alkyl Amines has this big uptick to itself, 5% higher. Let's wait and watch if that lasts, but that's a very interesting stock that I would be monitoring in the session today. So those are a few names that I would be keenly watching out for in the session. Just a couple of other stocks that I want to highlight at the broader end of the spectrum. We've discussed the large caps and some of the stocks in focus, but like I said, the auto ancillaries would be the ones that I would certainly be watching out for. Quick opening thoughts from our experts before we thank them. Rajat Bose, about 1% higher, 1.5%, 2% for the Nifty Bank. What do you do now?
Well, you see that Nifty Bank is already above the 2120 levels. If it were to sustain above that, then I'm expecting it 2255 to about 2375 on the upside. That's a possibility, and if it goes beyond that, then 2500 as it is would act as a resistance. Regarding the Nifty, I would say that again you should monitor 9400 levels. If it were to sustain above that, it is sustaining now, then there is a possible test of 9480 to about 9510 on the upside. But if we need to see whether it sustains above that or not. If it doesn't, at least I would be assessed.
Amit Harchekar, what about you?
Well, we remain super positive on the markets. We are looking for Nifty going beyond 9,700 and touching 10,000. So we still maintain a positive view. The stop loss we are maintaining is 9,100 on a closing basis. And as I said, 10,000 is the levels we are looking in the coming weeks.
Okay, gentlemen, we'll leave it at that. Thanks so much for taking the time out and being with us. Appreciate your time. Well, let's get in an important market voice. Gautam Trivedi of Nepean Capital joins us right now with his thoughts. Gautam, so good having you. Thanks so much for joining in. Neeraj here. Good morning. Gautam,
good morning.
the markets. Very well. Thank you so much. Staying safe, staying at home. What are your thoughts, Gautam? How do you analyze this recent large uptick that we've seen in India, sans any kind of stimulus coming in a major way versus what the globe is doing, and juxtapose the two positions and what it would mean for the equities?
Yeah, I think the way to look at the Indian market, and this is, I'm quoting Howard Marks, where he says there is an old saying that in times of crisis, all correlations go to one. So I think that's exactly what's currently happening with respect to the Indian markets, and the correlation with the U.S. markets is almost 85 to 90%. Now, where this is coming from really is the fact that I think we are currently joined at the hip with the U.S. markets and the way they perform. And if you look at empirical evidence in the past couple of months, the Nifty 50 had corrected as much as 37% since it peaked on the 14th of Jan at 12,362. So it fell to 7610, which was the low, and it's been the low so far, on the 23rd of March. Interestingly, the U.S. markets also corrected around the same time. So, that tells you, it gives you a sense of the impact that the U.S. is currently having on the Indian markets. My personal belief is that fundamentals aside, it's liquidity which actually drives the markets. And in India and in most emerging markets, that's really the case. So my point would be focus on how the U.S. liquidity and how the U.S. markets are doing, because that will have a immediate positive or negative impact on liquidity flows and from FIs into India.
So Gautam, would you reckon that the chances of any kind of major flows would be hampered by what could the potential view on the currency be? Because we are caught between a rock and a hard place, right? Without a stimulus, we do not get the recovery at a pace that we likely would want. And given a large stimulus, it means that there is a chance of a ratings action, chance of a run on the rupee, and therefore negative for the FI any which ways.
Yeah, so I think, the rupee on an average over the last 20 years has corrected about, well, I wouldn't use the word corrected, but has fallen anywhere from 5 to 6% on an average. So as a result of that, the current fall in the rupee, I think, has exceeded that initially. But, at 77, it was almost a 10% correction, but of course it's receded from those levels. But I think what's important to note really is the fact that the government inaction as of now, specifically for industry, I mean, they've done a fair bit for the poor. But the fact is the inaction towards industry, and I'm frankly not very hopeful there's much coming. So as a result of that, I think it's fundamentals that are going to frankly deteriorate significantly from these levels, and as a result of which you've seen a host of economists downgrading their India GDP forecast for FY21 to a negative 1 or 2% to a positive 1.5%. So maybe the truth lies somewhere in the middle or towards the lower end. But the point is, I still believe that in spite of all of that, the liquidity will drive the equity markets, and it will not be fundamentals. So if you look at the last 6 years in India, the compounded annual growth rate of the Nifty 50 earnings has been around 4%. How does one explain the fact that we still had a new lifetime high on the 14th of January this year, 12,362? So I think let's keep these factors in mind. So fundamentals are clearly not improving, but I can't say the same for the Indian equity markets. They could still surprise us.
Okay, so in keeping that view in mind, Gautam, what is it that your portfolio allocation strategy is currently?
Well, we are largely a mid and small cap fund. And the sectors that we have traditionally stayed out of, we will continue to stay out of, which has been mostly PSUs, has been gems and jewelry, real estate, and I think there's more pain coming in real estate, and of course, in general, the entertainment industry. So these are sectors that we've traditionally stayed out of. But going forward from today, we are very much focusing on consumer durables, i.e. staples, because that's something which we think is pretty much recession-proof. In fact, I was on a conference call 2 weeks ago of Procter & Gamble USA. And basically on that call, what they said was that as a result of the coronavirus, Americans are washing their clothes after one wear versus washing their clothes after 2 or 3 or 4 wears. And as a result of which sales of their flagship detergents, Tide and Ariel, have spiked. So we believe that that's an area we're focusing on. More than a third of our portfolio is weighted towards the consumer staple space. And, if we find more opportunities within the mid and small cap areas there, we would continue to add to that.
Well, it's interesting that positioning, Gautam, because a lot of people would argue about how large caps is the place to be. You would believe that earnings growth would take center stage over the size?
Yes, large caps, frankly, if you look at from the last 6 years of the Nifty 50, there's barely about 8 or 9 stocks that have actually done well. You can look at some of the flagship names that you would think would do well. For example, State Bank of India, Mahindra & Mahindra, ITC, Wipro. A lot of these stocks really haven't done anything. Hero MotoCorp, So you would have been better off putting money into a fixed deposit versus having invested in any of these otherwise blue chip companies. So I think there is no one rule that large caps will do significantly better, because you will see a whole bunch of mid-cap companies that may have a higher percentage of export business, certain companies that are factories globally and that are not sort of insulated from the domestic pain that's coming. Personally, I am more bullish on the U.S. Economy turning around faster than most of the other global economies. So as a result of which, I think companies in India that have exposure to the United States will do significantly better than companies that don't.
Okay, so in light of that, what would your positioning be on some of these key export-oriented spaces, Gautam? I mean, pharma seems to be everybody's darling. IT seems to be a bit of a meeting a bit of a stepsister, step-cousin treatment.
Sure. You raise a good point, because they're both in the outsourcing space. And the pharma sector in particular, for the last almost 6 years, did nothing. And it's come back to life driven primarily by names like Ipca and Cadila, which a lot of people believe are working on a corona vaccine or a corona drug. Now, when those drugs will be ready and when will they actually hit the market on a mass scale, the companies obviously have not as of yet given us any definitive timelines, but of course they're clearly working on them. So I can understand a few pharma companies that have obviously done well as a result, but that's taken the entire pharma sector up, and we've seen rebounds of anywhere from 30 to 50% in the past few weeks. So I am not positive on the entire space of the select companies. I think that clearly will outperform. Now, with respect to the IT space, we actually, we have a different view. We believe that this being an election year, we clearly think that the Indian IT space is going to undergo a lot of pain, given the fact that you have already 30 million people unemployed in the United States. It's an election year. I'll be surprised if President Trump will encourage any more outsourcing. So I think this could be actually a year where you will see business contract versus expand. Maybe FY22 could be different. So for the time being, we would stay away from the IT space.
Okay. There's a bit of a flutter that in a narrow pocket that has been created by Warren Buffett over the weekend, Gautam. Do you reckon that, it's a narrow pocket in India, you may not even be tracking it, but just thought of what your thoughts are on the aviation business?
Yeah, good question. I think the aviation business, as other businesses where there are mass gatherings, whether it's hospitality, whether it's a cruise line business. Of course, in India, we don't have any listed cruise line companies, but any businesses that are more, that have mass gatherings, including, by the way, the malls, gyms, movie theaters, I would stay away from that. So if you look at what's happening globally, let's look at AMC Theaters, the largest movie theater chain in the world. It's apparently close to filing for bankruptcy, and it's apparently got a lifeline of $500 million, but otherwise it was close to filing for bankruptcy. So there is a real problem with that industry currently. And fact is, even after the lockdown opens, how comfortable would one be to actually go watch a movie in a theater? That's one. Secondly, I personally believe that there is a decline in the model of a movie theater business. And that's led primarily by the fact that OTT platforms, whether it's Netflix, Disney+, Amazon Prime, and others, are increasingly gaining market share. Now, if you look at Disney+, their internal targets were to hit 60 to 90 million subscribers by 2024. 2 weeks ago, they crossed 50 million. So that gives you a sense of how rapidly the OTT platforms are taking eyeballs and market share away from traditional movie theaters. So I think the business model is going to undergo a major change, not to mention the fact that the post-coronavirus lockdown opening, I think there'll be few people, at least for the next 12 months, who would want to venture into a movie theater.
Okay. The final piece of this puzzle is what happens to valuations within the FMCG space, Gautam, and it's something that I'm pondering over for the last few days. Do you reckon that there is a chance for a contraction to happen because the erstwhile growth rates might not stay, or do you reckon that it's a resilient pocket and might stay strong?
That's a very good question, and I think that's something which we pondered as well at Nepean Capital of how much more exposure we should have to this space given the high valuations. See, it's like this. The alternatives of investment today are not very attractive. I mean, on the large cap space, I would, the financials clearly being as much as 41% of the Nifty 50. I'm combining the banks as well as the NBFCs. That's an area, frankly, we would be very careful about incrementally putting more money given the pain that the economy is going to go through over the next 12 months and given the absence of a government bailout package for industry. So if you club all that, I mean, financials as an asset class are still vulnerable. But I think years of sector, the consumer staples, where one cannot do without. So, it's something which you can't live without. And even in times of crisis like this, you see people queuing up outside grocery stores or general purpose provision stores to actually buy consumer staples. So I don't think in the near term you'll see a contraction. And in fact, I'll be surprised. Yes, Lever's numbers were obviously not good, but I'll be surprised if the contraction exceeds single digit for some of these companies on a top line basis.
Okay, interesting perspective. Gautam, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time and look forward to having you more often on this forum.
You're welcome, and thank you again.
Stay safe. Okay, that's Nepean Capital with their thoughts. Viewers, the markets look okay, about 1% and a quarter, not looking all that bad, I must say. About 9.3, keep that at the back of your mind. We need to slip into a break on the note that even the banks are holding fort for the time being. But the biggest sector of the last few days, and that's Telecom, that's up for discussion. We get Rajiv Sharma of SBI Cap Securities in about 3-4 minutes from now to talk about Jio, Bharti Airtel, maybe even a Vodafone idea, and what should you as an investor think of when you're trying to invest into these names. Stay tuned, or come back rather, once this broadcast ends, to that new broadcast at about 9:35 a.m.
How many places can you be at once? What if we said 9? BloombergQuint Live. We are everywhere.